This video is the second part in a two-part look at Japanese candlestick patterns that involve 3 or more candlesticks. In the first video, we looked at 4 different patterns. We're going to look at another 4 patterns in this video. 3 of those involve 3 candles and 1 actually involves 5 candles. 2 of the patterns are reversal patterns and 2 are continuation patterns. So do keep watching to the end of the video so that you get to hear about all 4 different patterns. Hello, I'm Peter Martin with Trading 212, and we add educational videos about trading the financial markets to YouTube on a regular basis. If you haven't already, make sure you subscribe to our YouTube channel by clicking on the red subscribe button, because that's just the easiest way to find out whenever we've added some new content. Well, the first of our 4 patterns is actually a continuation pattern, which is a bit rare. Most of the patterns we've looked at so far have been reversal patterns. So let's jump in now and take a look at this first pattern. Our first pattern is 3 soldiers. As I said before, a lot of the patterns we've been looking at have been reversals, but this is a continuation pattern. So 3 soldiers, also known as 3 advancing soldiers, or even 3 advancing white soldiers, a name that would be derived from black and white candlestick charts, is a group of 3 green candles in a row that show increasingly higher prices. And it's considered a bullish sign, especially if you see it occurring after a period of sideways ranging. So the pattern is like this. These are our 3 advancing soldiers, and they show a steady increase in price. And we're ideally looking for the openings, that is the bottom of each candle, to lie within the body of the preceding candle. And if that's not the case, at the very least you want it to lie close by to the body of the preceding candle. We also want to see closes that are at or close to the high of the session. So we're looking for either very small upper wicks or no upper wick at all. And these are all seen as signs of a kind of healthy way for the market to be increasing in price, so possibly a sign of sustainable gains. You should also be paying attention to the size of the candle bodies relative to one another and applying some kind of common sense. Ideally, we don't want to be seeing the bodies shrinking, and you should be especially careful if you have 2 long candles and then 1 short third one like that, say, as this is interpreted as showing a kind of stall pattern, and that might actually be a good time for taking profit on a long position. Another sign to watch out for is if the upper wicks are increasing in length with each candle. Our second pattern is called 3 inside up. So the 3 inside up pattern is a reversal pattern, and it's a bottom reversal pattern. So you would look for this if the market had been moving in a downward direction. So let's say we have this downtrend preceding this, and then the pattern formation is as follows. The first candle is a long red candle, so an indication for this period that the bearish influence that had been holding sway is still manifest in the market. Next, the second candle is a green candle, and it's got a smaller body. What you're looking for is for the body of that green candle to be contained entirely within the body of the prior red candle, and even better if it can penetrate more than halfway up into that candle. Then the third and final candle is another green candle, and this is a longer body. What you're looking for with this one is for the close of that candle, that's the top of the body, to be higher than the close of the previous green candle, and even better if that can be above the high of this first candle. Really, the higher this one goes up, because this is your confirmation that the pattern has completed, the better. And what we're seeing here then is a big swap over of power in the market from bears to bulls, with the high close of this green candle undoing really what the bulls had previously achieved here. And this is a signal of a possible bullish reversal. Our third pattern is called 3 inside down, and it's a bearish reversal pattern. And it's basically the opposite of the 3 inside up pattern that we've just been looking at. So, since 3 inside down is a bearish reversal pattern, we need an uptrend beforehand. So here the market has been rising, and then our first candle is a long green candle, a sign that at this point the bulls are still going for it. But then the next period we have a red candle. So this is our number 2 candle in the pattern, and the body of this candle needs to be contained entirely within the body of the number 1 candle. Now what I have here is that the tops of these 2 candles, 1 and 2, are actually the same. And that's okay, because then number 2 is still contained within number 1. But if you see the top of candle number 2 above the top of candle number 1, that's a no-no. You're not, in that case, seeing this formation. Then the confirming number 3 candle, this needs to be another red candle. And we want the close of this candle to be lower than the close of the second candle. If it's lower than the low of the first candle, that's even better. Now this formation, as I said, is a bearish reversal pattern. So if you see all these points that I've mentioned, then you're potentially looking at a top and the market could be heading lower. And what are we seeing? Well, the bulls are in control up to this point, but then the smaller body of this second candle makes the first 2 actually what we call a harami pattern. Remember that one? And it's a bearish harami. Despite the bullishness we've seen, the market is now showing indecision with this number 2 candle. And that's a signal that things could be about to turn. And then this further bearish action we get with the third candle suggests the balance of power has shifted from bulls to bears. So that wraps up our look at patterns involving 3 candlesticks. We're now, for our final pattern, going to look at one that has 5 candles. And this final pattern is another continuation pattern, and it's called a mat hold pattern. And a mat hold pattern is in some ways fairly similar looking to 2 black crows with an upside gap, which was a pattern we looked at last time. But unlike that pattern, this one is a bullish signal when seen in a rising market. So we would have an uptrend leading in to this formation, and then the first candle in our pattern is a long green candle. And then our second candle is a small red one, and we need a gap between the bodies of these first 2 candles. Third candle is another small red candle, and so far this is pretty much the same as 2 black crows after an upside gap, which was a reversal pattern, as I said. This pattern though then has a 4th candle that is another small red candle, and although we have a declining market here, what we need is for these candles to remain above the low of this first candle, because then although it looks as though the bears are holding sway, they're not actually gaining all that much traction. And then the pattern completes with this 5th candle, which is a long green candle, and we need a gap between the body of this candle and the previous one. And that shows that the bulls have swung back into action. They regain control after this little pause here, and that is a bullish signal. It is quite a rare pattern. It suggests that the previous uptrend we had here should resume. As I mentioned in the first part, don't forget that Trading 212's app has a practice mode, and that means that you can try out trading with these patterns if you're interested in them with practice money first, and that means you can hold off from trading with real money until you're happy that they work for you. Well, I hope you enjoyed this video looking at some patterns involving 3 candlesticks and one with 5 candles. If you did, please hit the thumbs up button and give us a like, or why not share your thoughts with us in the comments section. We do read every message we receive there. But that's all for now from me, Peter Martin, and Trading 212. Thank you for watching. I'll see you next time. Goodbye.